Welcome back, my dear learners. So let's discuss the remaining provisions in the basic concepts chapter. So let's discuss the next point, that is called, so till now we have discussed previous year, assessment year and deviations. And normally what is previous year? Year in which income is earned. That is called as previous year. And what is assessment year? The year immediately follows after the previous year. That means the year in which income is assessed. That is called assessment year. And what are the deviations? Do you remember? Unexplained cash credit, unexplained investment, then unexplained expenditure, etc., which is mentioned under 68 to 69D of Income Tax Act. The deviations. Now let's discuss certain circumstances in which the income of a previous year is assessed in the previous year itself. Normally, we know the income of a previous year is getting assessed in the assessment year next year, right? But in the following situations which we are going to discuss, the income of a previous year is assessed in that previous year itself. You don't have to wait for the assessment year to come in. That's what the Act says. Now, let's go through that particular circumstances where income is assessed here in the year of accrual itself. Let's understand. So, that's what they are saying. General rule, it says income of a previous year is assessed in the assessment year that is following the previous year. So, exceptions to this rule, it says that cases where income of a previous year is assessed in the previous year itself, let's understand in which all circumstances income of a previous year is assessed in the previous year itself. Okay, it is very simple. Starting with the shipping business of a non-resident, which is mentioned under 172. So, let's go through the theory. Thereafter, I will give you example to understand the concept. Okay, so starting with the theory, where a ship belonging to or chartered by a non-resident carries passengers, livestock, mail or goods shipped at a port in India, and the ship is allowed to leave the port only when the tax has been paid or satisfactory arrangement has been made for the payment thereof. 7.5% of the freight paid or payable to the owner or charter or to the person on this behalf, whether in India or outside in India, on account of such carriage is deemed to be his income, which is charged to tax in the same year in which it is earned, and the presumptive taxation and the assessment for non-resident, occasional shipping business, etc. So, let me give you one example for this section 172 to understand the concept. It simply means, say JK. Okay, I am from Canada. Okay, so I came to India. Okay, I brought my ship to India and my ship is in India. Okay, I've transported certain persons from Canada to India and I got a payment of rupees 10 lakh for this transportation, and this payment is received in India. I got rupees 10 lakhs income from India on my shipping business. I've transported certain items. I'm a resident of Canada. Okay, I'm a non-resident in India. So, what I'm planning after this particular transportation, I will go back to Canada and I will never come to India. I'm an occasional non-resident who's carrying out a shipping business in India. Occasionally I came, rarely I came to India. So, as you know, I've earned rupees 10 lakhs from India, right? So, I need to pay taxes in India because I've earned 10 lakhs from India. So, say in 2019-20, this transportation happened. So, normally I told you the year in which income is accrued is called as the previous year. So, in 1920, I've earned that income. And in only 2021, normal, as per the normal provision, the assessment year comes in and I need to pay the taxes. So, after completing this transportation, I will go back to Canada. So, once if I go back to Canada, will I come back next year to pay the taxes in India? No, I will say tata bye-bye. Right? Income Tax Authority, tata bye-bye. I will come next year. I will say like this, sir, I will come next year to pay your taxes. Okay, tata. Will I come back? Never. I'm not going to come back. So, department knows that. So, what the department says, Mr. JK, do one thing. Before you leave that particular port in India, before you leave India, pay taxes. Then get lost. Once you have paid the taxes, when we don't have no connection. You get lost, we don't care. That's what the Act says. So, as per section 172 of Income Tax Act, if a person who occasionally visits India as a part of his shipping business, then he is supposed to pay his taxes. Then only he is supposed to leave India. That's what the Act says under 172. And for paying taxes, there is a thing called a presumptive taxation. And the presumptive taxation, etc., you will study when we cover profits and gains from business or profession chapter. And section 172 will be detailed That details will be covered only in your final leg. For inter level, this section 172 and all is not required. Okay, so under section 172, the rate of income, that's what deemed income, that's what they're saying, 7.5% and all, and this is actually not required for your examination. For your examination, you need to know only one thing. What is that? If I'm a non-resident shipping business providing an occasional shipping business in India, once I visited India, earned income from India, I need to pay taxes in India, then only I'm supposed to leave India. That's what the point that you need to know. Are you with me? Okay. So let's move forward. So the next situation where income of a previous year is assessed in that particular previous year itself, that is the person leaving India, which is mentioned under 174 of Income Tax Act 1961. So what it says, let's finish off the theory, thereafter I'll give you example to understand the concept. Okay. So where it appears to the assessing officer that any individual may leave India during current assessment year or shortly after its expiry and has no present intention of returning to India, then the total income of such individual for a period from the expiry of the respective previous year up to the probable date of his departure from India is chargeable to tax in that assessment year. What do you mean by this, sir? We are not getting anything. That's why I'm here. I'll give you example, okay? Don't panic. It's simple. Section 174 says, say JK. Okay, I'm planning to leave India forever. I'm planning to migrate to Australia. Okay, example, say in 31st December 2020, I'll leave. 31st December 2020, I'll say tata, bye-bye, goodbye to India and I'll go. So, as you know, our previous year or assessment year, the year normally it starts with the first April and ends with 31st March of a particular year, right? So the relevant previous year where I'm leaving India, so the year where I leaves India, it can be called as, say, in 2020 I've left India, right? So it is 2020-21 previous year. Say till 31st December, I have an income of rupees 10 lakhs in India. I have an income of rupees 10 lakhs from India. Okay, so as you know, this income and the previous year is 2021. Right, 2021, that means from April 1st till 31st December 2020, I've earned an income of 10 lakh. From 1st January onwards, I've left India. So, my assessment year, as per the normal provision, my assessment year is on 21-22 next year. But in 21-22, I'm in Australia. Will I come back to India to pay the taxes? No, government knows that. So, what they are saying, if you are leaving India and if you have no present intention to come back to India, then do one thing, pay the taxes till now, then get lost. We don't care. So that's what the act says. Till December 31st, 2020, I have earned an income of rupees 10 lakh, pay taxes for that income, then go away. We don't care. That's why they're saying that 10 lakhs is accessible in that particular previous year itself. Only after paying taxes, I'm supposed to leave India. Otherwise, don't go, stay here. That's what the act says. Pay taxes, then get lost. We don't care. Otherwise, stay here. Okay, let's continue. So that's what section 174 is all about. Now, moving forward. Next situation. It says AOP, BOI or AJP formed for a particular event or purpose, which is mentioned under section 174A of Income Tax Act 1961. What it says, if an AOP or BOI etc. is formed or established for a particular event or purpose and the assessing officer apprehends that the AOP or BOI is likely to be dissolved in the same year or in the next year, then he can make assessment of income up to the date of dissolution as income of the relevant assessment year. What is this? Simple. Say there is a AOP, Association of Persons, or we can say BOI. It is called as what? Body of individuals. Okay. We three are there. There is JK and there is another person called Mr. A and Mr. B. We three formed a JV. Okay, so JV was there from 1st April to 31st December 2020. On 31st December 2020, we are planning to dissolve. Okay, we are stopping our JV. We are separating. From 31st December 2020 onwards, there won't be any JV. Okay, there won't be any body of individual. So what the act says, this JV has, this particular body of individual has accrued an income of say 20 lakhs. From 1st April 2020 to 31st December 2020, this JV has accrued an income of 20 lakhs. Do one thing before dissolution, pay your taxes, then go. Because once after dissolution, there is no BOI, right? So JK will say Mr. A will pay, Mr. A will say B will pay, B will say JK will pay. It will be like that. Normally, the department will assess 3 of this as a body of individual. That's why it has been defined as a person. So 3 of this will be assessed together as a body of individual. That's what the concept is. So if there is no BOI, then the responsibility center will be a dispute. So what they are saying, before dissolving your BOI, pay your taxes, then dissolve, then get lost. We don't care. That's what the act says. Don't wait for the assessment year to kick in. Pay your taxes, then you dissolve. So that's what 174A is all about. So if a AOP, BOI, etc. is formed or established for a particular event or a purpose, and the assessing officer apprehends that the AOP or BOI is likely to dissolve in the same year, then he can make the assessment of the income up to the date of dissolution. Then assess your taxes up to the date of dissolution, assess it, pay your tax, then dissolve. That's what they are saying. Again, next point, where your income is assessed in the previous year itself. That's what the next circumstance it says. The person likely to transfer property to avoid taxes under 175 of Income Tax Act. What is this? Let's understand this provision. During the current assessment year, if it appears to the assessing officer that a person is likely to charge, sell, transfer, dispose or otherwise part with any of his assets to avoid payment of any liability under this act, then the total income of such person for the period from the expiry of the previous year to the date, then the assessing officer commences proceedings under this section is chargeable to tax in that assessment year. What do you mean by this? It is very simple. Say JK. I'll give you an example. In 2019-20, that means from 1st April 2019 till 31st March 2020, JK earned an income of 20 lakhs. This is my total income. So on my total income, I am supposed to pay taxes. If I didn't pay taxes, then what the department will do? Department will start recovery proceedings, right? They will attach my asset and they will, they will sell off my asset and they will make equivalent amount of tax. Thereafter, if there is any balance, it will be provided to me. Same for this income, I am supposed to pay rupees 1 lakh as taxes. It is only for the purpose of example. So 1 lakh is my total tax payable. Only for the purpose of example. If I am not willing to pay taxes, then I have assets of worth 2 lakhs. Or I'm not complicating, I will say assets worth 1 lakh. If I'm not paying my taxes of rupees 1 lakh, then the department will what? They will recover from my assets. Yes or no? But what I am planning to do on 1st March 2020, because my assessment comes in 2021. My previous year is 1920. The year in which income is earned is 1920. My assessment will come only on 2021 next year. So what JK, he very intelligently on 1st March 2020, that means in 1920 previous year itself, JK is planning to sell his assets worth 1 lakh. JK is trying to trick department, because if there is no assets and I'm not paying my taxes, then how will the department collect taxes from me? So JK planning to sell his assets. AO came to know about this. Coincidentally, AO came to know about this. Then what AO can do? That's what they are mentioning in section 175. So I will read it again. Please listen. It says that during the current assessment year, if it appears to the assessing officer that a person is likely to charge, sell, transfer or dispose of or otherwise part with any of his assets, that means JK is selling his assets to avoid payment of any liability under this act. That means liability simply means payment of taxes under this act. Then the total income of such person for the period from the expiry of previous year to the date when the assessing officer commences proceedings under this section is chargeable to tax in that assessment year. It simply means that Assessing officer will make a statement to JA, don't sell your asset. Pay your taxes, then only sell your asset. I won't legally allow you to sell your asset. Pay your taxes of rupees 1 lakh. Then dispose of your asset, we don't care. So assessing officer has power to assess that particular income in 1920 and make JK to pay the taxes in 1920 itself without waiting for 2021 to come in. That's what the act says. So hope you got my point. So before selling the asset itself, assessing officer can complete the assessment and make JK to pay the taxes. That's what the moral of the story is all about. Let's continue our discussion. And the last situation is discontinued business. In the case of discontinued business, which is mentioned under 176 of Income Tax Act 1961. So where any business or profession is discontinued in any assessment year, the income of the period from the expiry of the previous year up to the date of discontinuance may, at the discretion of assessing officer, be charged to tax in that assessment year. Suppose JK is planning to dispose of my business. Okay, say I'm in textile business. Okay, textile business. And in 2019-20 year, on 1st March 2020, I have declared a stock clearance sale. Okay, so on say 10th March, I am planning to discontinue my business. 10th March 2020, I am planning to discontinue my business. So in 1920, I am in receipt of 25 lakhs as income. So what the assessing officer say? Assessing officer will not wait for 2021 to come in, the assessment year to come in. Rather, he will say, before discontinuing your business, pay all your taxes. Then only you discontinue your business. So that's why I'm saying, in this circumstance also, the income which is earned in 1920 will be assessed in 1920 itself rather than 2021. That's what the Act says under Section 176 of Income Tax Act 1961. Hope it is clear.